hold themselves out with other titles that are somewhat meaningless from a regulatory point of view. They may call themselves a financial advisor, an investment counselor, a retirement consultant. Those are really meaningless from a training or regulatory perspective. And if your financial person says they are a retirement consultant, you might want to dig a little deeper into their background and training and find out if they really are qualified to give you advice. So in addition to registering firms and their salespeople, we also register securities products. And by securities products, I mean stocks, bonds, mutual funds, partnership interests, promissory notes. The definition of a security in Wisconsin is actually quite broad, and all securities must be registered unless they are exempt. So in addition to registering products and people, we conduct examinations of the firms that are registered with us. And when we conduct an examination, we actually go into the branch and we review their books and records to make sure they are compliant with our securities laws. We provide investor education and alerts like I'm doing today. And I think foremost to your listeners today is we investigate customer complaints. You can, if you feel you've been scammed in an investment, you can file a complaint with our office and we will investigate to see if there was a violation of the securities laws. I am the attorney supervisor of the Enforcement Bureau in the Division of Securities. We have examiners and legal staff that conduct investigations to determine whether there have been violations of the law. And if there have been, we will bring an administrative action before a hearing officer. We have authority to investigate fraud over anyone selling securities in Wisconsin, registered or unregistered. If there's a violation, we can order a firm or individual to cease and desist from that unlawful activity, and we can order restitution and disgorgement of illegally gotten gains, and we can order penalties. These are pretty strict penalties, and restitution and disgorgement returns money to the investors. So these are important tools in our toolbox. And by the way, the willful violation of the securities laws is a felony, and we will make criminal referrals to local, state, or federal law enforcement authorities where appropriate.
Awesome. So I know we had some people join while you were kind of going over that stuff. So I just want to quickly reiterate, we're here today with Robin Jacobs with the Department of Financial Institutions talking all about investment scams. And the session is going to be recorded. You'll get a link to the recording. So if you just joined us, you don't have to worry about taking notes right now. You'll get all of this information by email after the event. So Robin, you gave us a really great overview of what DFI does, which is a lot. And it's great to know that you're able to kind of give people who have experienced a scam some closure, because we know a lot of the times, there's just not penalties for these kinds of people. So it's great to hear you guys can do that. And I know you mentioned kind of some things to look out for or be wary of. And I'm wondering if you can give us some more of those red flags, especially when someone might be looking to retain an investment advisor.
For sure. One thing to know is that if you are retaining someone who is actually registered with our division, that's a pretty good, you should have a pretty good confidence level that you're dealing with someone who's legitimate and trustworthy. That isn't to say that all registered people comply with the securities law all of the time, but they are much more likely to than an unregistered financial advisor. So the first red flag to be aware of is if your advisor is not registered to sell securities. And you can easily find out if they're registered by Googling their name. If you Google broker check, that will take you to a site called brokercheck.finra.gov. And this is information they will have at the end of the event today. And you can enter the name of your advisor and you will quickly find out if they are registered and if they have a disciplinary history. Or just call us at DFI and we'll let you know if your financial advisor is registered and if he has a disciplinary history with a regulator. So that's first and foremost, make sure you're dealing with a registered person. Other red flags that we see in our investigations, a scammer will ask you to make your check payable to them. instead of the custodian. If you think you're investing with an investment advisor and they ask you to make your check out to them, that's a red flag. Never, never, never make out a check to your advisor. It should go to the issuer of the security or the custodian of the account, the Charles Schwab or the, Edward Jones, Raymond James, who's ever custodying the funds. If your investment advisor asks you for your account password so they can trade in your account, that's another no-no. Do not give out your account password to anyone, even your financial advisor. They have a legitimate way of conducting trades, and it isn't using your own account password. If you are with a financial advisor and they're trying to solicit you to invest in an investment, but they're only giving you a vague description of what the investment is about, and they're not providing you with any paperwork, that's a red flag. Professionals will provide you with the appropriate paperwork and with written disclosures, and they will be very informative. So if your financial advisor can't even give you a description of the investment, I would walk away. And the big one that you've probably heard before, but I'll say it again, if an investment sounds too good to be true, it probably is. There is nothing guaranteed when it comes to investments. There are always risks. So if someone tells you you're going to get a great yield with little or no risk, that is simply not true. Other red flags that we have seen is that scammers will often brag about their lifestyle and their extravagant purchases. And they do this because they're trying to create confidence and trust in you that, gosh, they're doing so well, they must know what they're doing. Many of those scam artists have managed to buy those extravagant purchases by taking their money directly from the investors. So be leery. Do you really want to do business with someone who behaves like that? And finally, and this is especially with the elderly, scammers will engage in grooming activities, and that is certainly a red flag. So why do they engage in grooming activities? Because they want you to become dependent on them and trust them kind of blindly, and you are less likely to notice you're being defrauded when you've been befriended. So the kinds of grooming activities I'm talking about is when your financial advisor offers to help with errands and doctor's appointments. They drop by, unsolicited and bring you gifts, and they attempt to befriend you in a way that kind of encroaches on your life. And I'm not saying you can't be friends with your advisor, but watch out for someone who's really heavy-handed about it.
Yeah, and it's interesting because I feel like a lot of these red flags kind of pop up across scams. So I'm glad, that if you just keep in mind, like you said, it's too good to be true. That is a good thing to just always keep in mind, but especially sounds like with investments. So
Absolutely.
so you've given us some kind of things to look out for. I'm wondering if you can go into some specifics about common types of investment fraud, and if you have even some real life examples of stuff that you've investigated and charged.
Well, this is kind of my bread and butter. What I do is largely investment fraud. And I think we have to start with the old-fashioned Ponzi scheme. You've probably heard of a Ponzi scheme. You may not know exactly what it is. A Ponzi scheme can operate with any type of investment, from oil and gas to real estate to cryptocurrency. In a typical Ponzi scheme, the perpetrator collects investor funds, but doesn't use the money as they claimed they would. Instead, they use the money for their personal benefit. And the scammer will often create fake statements that make the investment look very profitable. And the investors are very happy, and they tell their family and friends about the great investment, and then they're lured into it. And these poor investors have unwittingly brought in, their loved ones to this scam. So the scammer is collecting money from new investors and uses some of it to send phony distributions to the early investors, who continue to be satisfied with their investment, and they continue to tell others. This is exactly how Bernie Madoff operated his firm for years. He never actually invested the money, and he sent out fake statements to investors, making them think they were getting 10% returns, regardless of how the market was actually performing. Even if it takes a while, Ponzi schemes eventually run out of new investors, and then the whole thing collapses. In Wisconsin, we recently alleged a Ponzi scheme against two persons who ran a company called Wisconsin Home Buyers Network. And if you Google Wisconsin Home Buyers Network, you'll be able to pull up our order and other press releases that were issued about this case. So these promoters told investors that they were buying, rehabbing, and flipping properties for a profit. And they solicited almost $3 million from 16 investors. In exchange for their investment of funds, investors received promissory notes, which is basically an IOU in writing, with rates of return between 12 and 36%. Those are really good yields, right? You can't get 12 to 36% anywhere else these days, except maybe in cryptocurrency, but we'll talk about that later. So investors were very happy, and this went on for several years, where they would liquidate their retirement accounts, give it to these promoters, and collect their interest checks every month until the house of cards collapsed. And when we investigated, we discovered that those interest checks were not coming from revenues of the business, but from new investors whose funds were used to pay prior investors, pay the promoters their draw, and pay down company debt. So it was a Ponzi scheme. Further, those promoters never disclosed to investors their background, which included prior bankruptcies, tax liens, tax warrants, thousands of dollars in money judgments, and one of the promoters had a conviction for felony forgery. This is all material information that investors would have wanted to know and consider before investing in Wisconsin Home Buyers Network. We issued orders for restitution, referred it criminally, and one of the promoters was sentenced this year to 33 months in prison. His partner has not yet been sentenced. So that's just one example of very many investors who thought they were in a good investment portfolio and found out it was all a sham.
Yeah.
So we have also seen financial losses in some other areas. That one involved real estate. In the past few years, we've had a lot of complaints involving precious metals, and I'm talking about silver and gold coins. So DFI is involved in two national enforcement actions against one company called Safeguard and another called Metals.com. These are both precious metals dealers who targeted the elderly to get them to invest in largely worthless silver coins. So in the case of Safeguard collected in excess of $68 million from at least 450 investors nationwide. The Safeguard defendants are accused of failing to disclose the markup for the coins they were selling, and that investors could lose the majority of their funds once the transaction was completed. In many cases, the actual market value of the coins sold to investors was substantially lower than the value of the securities that were liquidated to fund the purchase. In Wisconsin alone, 17 investors were defrauded out of $1.8 million in the execution of this national scheme. And Metals.com operated very similarly. That case involves over 1,600 investors nationwide and over $185 million in customer funds, $2.7 million from Wisconsin investors. And many of the investors lost more than half of their retirement savings as a result of the exorbitant prices they were charged by Metals.com and its agents. Safeguard and Metals.com used similar fraudulent sales tactics. They targeted retirees using Facebook and other social media sites. Often these sites were connected to conservative influencers who, talk about sort of an anti-government, global economy conspiracy theories. Sales agents would cold call these retirees using scare tactics like the government's going to freeze your accounts and the securities are not insured and there's going to be a global economic crash and all of your retirement savings will be lost. So they use all these scare tactics to get people to decide to buy silver or gold, but what they're not disclosing is that they're selling them worthless coins with a markup well over 50%. So that means if you liquidate your securities in your retirement account, and let's say it's worth $100,000, the coins that you're buying are only worth about $50,000. And that difference is what's being paid in commission to the sales agents. So it's a real problem. It's a nationwide problem. And we are continuing to cooperate with other states and the CFTC to bring it under control.
Wow. I feel like it's so helpful to hear actual real life examples of this kind of stuff, because I feel like sometimes it gets kind of caught in this theoretical realm of like, look out for bad investments. But to hear, kind of how these things actually work, is super helpful. And like I mentioned before, it's great to hear that you're able to actually take some action against these bad actors, because a lot of the times, as we know with scams, there's kind of a lack of closure. I wanted to bring up a question, Robin, and this is kind of out of left field a little bit, but this is, you mentioned the Ponzi schemes. And so I just wanted to quickly ask if you could differentiate, especially because you mentioned people reaching out by social media, kind of the difference between a Ponzi scheme and what is a multi-level marketing company. And if that's not something you can speak to, that's okay. I just know, sometimes people are like, oh, it's not a scam, it's a multi-level marketing company.
Right.
And if you could kind of differentiate those for us.
Sure. I think I can. So in a Ponzi scheme, you're collecting investors' money, and instead of investing it in a real business, you are distributing those investment funds to your prior investors. They think there's a business generating revenue, and that's how they're being paid. In actuality, there's no real business going on. You're just taking money from one investor and giving it to another, and skimming some off for yourself as well. So a multi-tiered system that you were asking about, that is a little different in that what you are doing is trying to bring in others. And the more people you bring in, the more money you make as part of that pyramid. Now, sometimes there's an actual business product that people are being trained in and selling, in which case it may be a legitimate arrangement. But other times they're not actually doing anything other than bringing in others, making them pay to be there, and they create a tier. And the higher you go up in the tier, the more money you make. It's a question of, is there any there? When we get complaints that turn out to be a multi-tiered structure like that, we usually refer them to DATCAP, the Department of Agriculture, Trade, and Commerce, because that's their expertise.
Okay, awesome. Thank you for kind of like laying that out. Like I said, I know those kind of the multi-level, multi-tier things are really popular, especially when we talk about like gig economy and like, people trying to get like a quote unquote side hustle. So I just they seem kind of related. So I just wanted people, to be aware that you can check into stuff like this and make sure it's not the Ponzi scheme. So
we will figure it out one way or the other. If you will
yeah.
call us or call DATCAP, get your complaint filed. We check out all of our complaints. We do our investigation, and we will let you know what we find out.
Awesome. Great. So now I want to go back again. You kind of hinted at something which I'm sure a lot of people are curious about, and this is cryptocurrency. It's kind of all over the news. People talk about it all the time.
Yeah.
Is it a safe investment or no?
This is such perfect timing for that question. So Bloomberg News reports that in the last 8 months, the crypto market has lost $2 trillion in value. So is it safe? No, it is not safe. It's very volatile. But before we get into the risks of cryptocurrency, I just want to back up a little and define some terms. So cryptocurrency is a form of a digital asset that is processed on something called the blockchain. When you read about cryptocurrency, they always show this icon of a gold coin. It has no physical existence. It's a digital asset, and it lives on the blockchain. It's secured through cryptography, hence cryptocurrency, right? Cryptography. And that can't be read without a key. So the key to your cryptocurrency is actually a long series of numbers and letters that are held in a digital wallet. Not a real wallet, it's just electronic, a digital wallet. Whoever holds the key controls the currency. If you lose your key, you will lose access to your Bitcoin forever. There's no customer service line to call to get a new password. And I've read that there's an estimated 20% of all Bitcoin that's currently in circulation that's worth billions of dollars that is lost in digital wallets because the users can't access them anymore. They've lost their key. So,
and if I can, just because we mentioned like the key, whoever holds the key. So I will ask this question now and you can answer it now or later, but what happens if somebody else gets my cryptocurrency key? Like,
then they hold your crypto. You don't
okay.
have it anymore. The
All
key
right.
is everything. And that's how you transfer crypto. You know, in your digital wallet, you're not actually holding cryptocurrency. The cryptocurrency lives on the blockchain. All you have in your wallet is the key,
Okay.
a series of ones and, you know, letters and numbers. And it's a long series. You couldn't memorize it.
Yeah.
So cryptocurrency is designed to work as a monetary system where individual coin ownership records are stored in a computerized database, and that database is what we call the blockchain. So it uses cryptography to secure the transaction records, control the creation of coins, and verify the transfer of ownership. The important thing to know for our purposes about blockchain is that it allows cryptocurrency to exist outside the control of governments and any central authority. We can't regulate cryptocurrency right now. There is some legislation that's been proposed federally in Congress, but right now we don't regulate cryptocurrency as a currency. We can regulate it as a security, but that's a different question. So some examples of cryptocurrencies that you may have heard include Bitcoin, Ethereum, Tether, Binance Coin. These cryptocurrencies are often available through a crypto exchange, such as Coinbase or Binance. And actually, there's thousands of cryptocurrencies out there. Most people only know about the top 3 or 4 and only care about those. But for our purposes, when it comes to investment, what I would want your audience to know is this. Once a crypto transaction is processed and confirmed on the blockchain, it's irreversible. You know, if someone else gets your key, you're done. You can't get it back unless they agree to give it back to you. And you can't come to me and ask me to fix it because it's not backed by the government or banking regulations. It is largely unregulated and uninsured. And that's the way the crypto community has wanted it, at least until recently. The value of cryptocurrency fluctuates frequently, and no one should invest in cryptocurrency unless they can afford to lose all of their investment. And I think what's happened this year in cryptocurrency must convince everyone you don't belong there unless you can lose your money. And speaking of recent events, recently 2 crypto lending firms, Celsius and Voyager, actually filed for bankruptcy. And the predominant hedge fund in the crypto area, Three Arrows Capital, also filed for bankruptcy. So there has been a lot of contagion going on where the failure of one firm is leading to failures in others. So you need to be very careful. The other thing about cryptocurrency is that it's very attractive to fraudsters because of its anonymous nature and because it is unregulated. You know, you can go on the blockchain and you can see all these wallets and you can see the transactions, but you don't know who owns the wallets. So it's both transparent, but also anonymous. So for all these reasons, anyone should proceed very cautiously before investing in cryptocurrency.
Yeah, and I know cryptocurrency is kind of a hot topic. It's very, you know, you explained it in a way that seems really simple right now, but if somebody asked me about it, I wouldn't be able to explain it to them again. So I'm just gonna do a quick plug that if you have questions, this is a reminder that the chat box and Q&A box are at the bottom. This is, like I said, a great opportunity if you are maybe investing in cryptocurrency or, you know, if you have questions about anything else we've talked about, feel free to drop it in the chat.
Sure. And Courtney, I don't mind if you at the end want to give your audience my email. They can email me questions as well. I don't mind following up.
Perfect. Awesome. Yeah, because I know probably some of the questions people might have are maybe more sensitive in nature. So
Right.
following following this event, like I said, you'll all get an email, and we'll be sure to include Robin's email address so you can contact her directly. Okay, so we've talked about some investment fraud stuff. We've talked about cryptocurrency. Are there any other red flags or types of financial scams that you want to warn against?
Yes, some of them we covered, some of them we haven't. The first one that I would repeat my warning is legitimate securities investments do not have guarantees. So if you are being offered something with high reward and they're telling you it has little or no risk, you should walk away. That's a definite red flag. And also high pressure sales tactics, where they tell you you need to decide within 2 days whether you want to invest in this. This fund will only be open for 48 hours. That's a red flag. There's no reason to have a time limit on when you should decide to invest. And certainly no investment decision should be rushed before you have a time to evaluate the risks. And the other red flag that I have noticed from our investigations and our cases is a lack of written information. All material risks should be clearly disclosed in writing to investors. And in the writing, you want to look for specifics on how the investment will make money to pay returns. How will your investment funds be used? What fees is the promoter collecting? And has the promoter invested their own money in this investment? This is all material information that I would want to know before I invested in something, and it should be disclosed in writing. And if you do receive that writing, save it, please. Save it, save it, save it. Take notes of your communications. Save all of the material that you're given in a box because you may want to refer to it later. Other red flags, when you're getting unsolicited offers and cold calls, legitimate businesses don't find investors that way. So be leery if you're getting cold called. If the promoter is requesting an upfront fee or some unusual payment method like gift cards or crypto, again, legitimate businesses don't collect payments that way. If the business model that they're presenting to you is complex and you don't understand it, why would you want to invest in that? You should invest in something you're comfortable with and understand. And if they can't explain it in terms you understand, I would walk away. And finally, I know a lot of people your age, Courtney, they communicate via chat messages. Email is like a thing of the past. Okay, that's fine, but a lot of legitimate businesses are not going to communicate with you via chat messages and using money transmitters like Venmo. You can pay your friends with Venmo, but you shouldn't be paying legit financial advisors that way. So think about how they're operating their business and whether that really seems like a legitimate way to run a business. And those are some of the red flags that I would look for.
Awesome. I feel like it's a lot to take in. And so I feel like a lot of this kind of speaks to like, if you're offered an investment opportunity, it feels like there's kind of a list of things we should be checking for. So if I'm offered an investment opportunity, is it best for me to go to the DFI website to like kind of check off my boxes, or what's your advice there?
Well, I do have some good advice for you. So the first thing I want you to think about when you have an investment opportunity is who's offering it. A lot of us learn about investment opportunities from friends and family. Like in that Ponzi scheme I was telling you about, they were bringing in friends and family because they thought it was a good investment and they thought they were getting truly legitimate interest payments. So even if you get a recommendation from friends or family members, they could be victims and not realize it. So before you invest, you want to do your due diligence. And that means checking out the salesperson first. Who is selling this investment? Do that Google search and find out if they're registered. If you don't want to do that, call us, 608-266-2139. We can tell you if they're registered. But even more than that, do a general Google search. When I was talking about Wisconsin Home Buyers Network and the financial background of those promoters, they had monetary financial judgments against them, felony convictions, tax warrants. all that would have been disclosed if the investors had done a Google search. So do one of those Dr. Google searches, look them up, see what you can find out. That's a good way of finding out if these are trustworthy people that you want to entrust with your money. And get a second opinion. Don't be ashamed that you're confused and you're not sure what you want to do. And is this a good opportunity? Talk about it with your friends and family. Go to some professional advisors and say, hey, what do you think of this private placement? Should I invest in this business? Ask a lot of questions and get their responses in writing. And remember that once you hand your money over to someone who's a fraudster, it's unlikely you'll be able to get it back, because fraudsters don't invest in certificates of deposit. They spend your money as soon as it comes in. So it's well worth your while to do your due diligence up front. And please, if you think you've been scammed, give us a call or email us, and we are here to help. Don't be scared. Don't be ashamed. There are plenty of people smarter than us that got taken. Bernie Madoff scammed the best of the best, right? People who were wealthy, people who had advisors, they were all taken in by him. It can happen to anybody. And I think the final thing I would say is, if you do decide to invest, keep involved. Read the statements that you receive and save them. Check your account balances. Make sure that the transactions you see have been authorized, and take note of any unusual activity. When we investigate a case, it is always so much easier if the person who's complaining has kept all of their records, their notes, their statements, their emails, their text messages, however it is that you are communicating with the promoters, save everything.
Awesome. I feel like we've covered a lot of ground and you've provided so much information. And so I just want to reiterate, all of this is going to be in the recording, and you'll get links to stuff. I do just want to quickly, because you mentioned, if you think you've maybe been the victim of a scam, reach out to DFI. And I love that you mentioned, like, this can happen to anyone. There's no shame involved. And I just want to kind of really highlight that point that, these people are criminals. It's their job to be good at stealing your money. So you really, this can happen to anyone. And like Robin said, there isn't any shame in this happening. And, nothing's ever going to come of it if you don't go to someone about it. So for sure, speak up as soon as you can. Robin, I have an interesting question from Reed in the Q&A, and he's asking, and this will kind of be the last thing before we do kind of a wrap up, but
Okay.
he's asking, so like nationally, we have some kind of federal oversight programs and organizations, but what about international crimes? How do those get investigated or handled? Because, we know a lot of the time scammers are in call centers, not in America. So how does that happen?
That's a great question. The problem with the internet is that you often don't know who you're dealing with, right? We often find when we investigate our cases that an investment opportunity was not actually coming locally from this area. It was actually coming from, the Middle East or from Russia or wherever. It's very difficult for an investor to confirm the identity of a person who's making an investment offering to them. And it's because of the global way we operate and the internet. And it's just easier for scammers to find us wherever they live on the planet. Our jurisdiction really ends at the border of Wisconsin, right? We're a state regulatory agency, but we do cooperate with federal authorities, and they, of course, have ways of investigating internationally. So it's a little above my pay grade, but there certainly is cooperation among nations in attempting to shut down fraudsters wherever they are.
Awesome. Yeah, it's certainly complicates things. But
It
it's good
does,
to
and
know.
we
Yeah.
find out that a scam isn't local when we track down the IP address, but most retail investors don't have the ability to do that.
Yeah. Great. I want to thank you so much, Robin. And before we let you go, I just want to quickly let everyone know again, this webinar is part of a series. We do one every month and we invite different guests each month. Next month, we're going to be talking about kind of the emotional impact that a lot of these scams have and some support programs that AARP has. So I will include a link for that event in your follow-up email as well. And the AARP Fraud Watch Network is a free program available to anyone. We do have information about investment scams on our website, but it is great to have a state agency that is so willing to help and so knowledgeable. So if you have investment scam questions, please be sure to reach out to DFI and they can get you on the right track. Robin, before I end the webinar, did you have any closing remarks or things that you want to leave viewers with?
Yeah, well, first of all, I think it's great that you're going to have a program on the emotional impact of scams, because I think that is something we don't often talk about in public. But beyond that, I would say in your dealings with others, when it comes to your investments, trust but verify. Okay, take whatever steps you can to verify that what they're telling you is true and accurate, and keep me on your speed dial, because I'll be happy to work with you and vet that opportunity.
Awesome. Thank you so much, Robin. Thanks everyone for joining. Keep an eye out for that email with all of these resources and the recording. And yeah, have a great rest of your day. Thanks everyone.
Thank you, Courtney.
Bye.
Bye.